So good afternoon, everybody, and welcome to a very special presentation of our Resolve It in 30 series. We're doing this on a Wednesday afternoon because we have some really incredible news from a very special member of our chamber, James Wang, who is the president of Asian Bank, wants to, and we're really excited about this, present a brand new product that is really geared for our small businesses in terms of the opportunity to grow your business, in terms of access to capital, and in terms of partnerships. So with that being said, James, I don't want to take any steam away from you, so you go ahead and you take it away. Thank you.
Great. Thanks, Karen. It's a pleasure to be here, and thank you for the invitation to have this opportunity to talk about the product, the Small Business Booster Loan, with you and the membership. So really, in a nutshell, the Small Business Booster Loan is a product that we came up with specifically for small businesses, targeting their working capital and business expansion needs, and secured by business assets. So no real estate is required. And for us, that is unique in that, and historically, most of the loans that we've been doing has been real estate secured, but we wanted to have a product that is, up to $100,000 and can be repaid in the course of 3 or 5 years by small business owners and secured by business assets, and not have the ownership of real estate or the inability to pledge a piece of real estate as an obstacle to them getting the financing that they need. But before I go into further detail about the product, just to give you a little bit of background about Asian Bank. So we are a minority bank and a community lender founded in 1999, which is about 22 years ago. And we provide small business loans, investment real estate, and residential mortgages. We offer branch, online, and mobile banking. So that means remote deposits and everything that's quite popular. We actually just introduced that earlier this year. So we're fairly excited about that. We currently have 3 locations, one in Center City, Chinatown Convention Center area on 9th Street, and one in Northeast Philadelphia at 6509 Castor. And also our main loan office is at 1023 Ray Street, although we do have lenders that have office hours in all 3 locations. So if that were something that people were interested. And the reason I wanted to start off the slide and the presentation about us is that, as a minority bank and a community lender, we service primarily the immigrant population. So we understand and share the same values that many of you and the chamber share and care about. So in a lot of ways, we found commonality in the things that we approach, in the way that we approach things, and also that is reflected in how we approach loans. What I wanted to share with you next is a little bit about how we look at underwriting and how the new product kind of is built into our underwriting. So typically, when you go to a lender, a couple of things you should be prepared to discuss. When you want to talk to a lender about a loan, the first thing being, what is the name of your business, and and what does it do? The type of business, and who are the owners? Do you own it by yourself? How do you own it? Is there an entity involved? What is the percentage ownership? You want to talk to the lender about how long has the business been around? What products do you serve? Do you provide? And what specific markets do you target? Who are your customers? And you want to let the lender know, let us know how much money it is that you're looking for, and what will you be using it for. Is it working capital? Is it a revolving line? Is it to buy equipment? Or is it you want to fix up your business, or if you want to buy a partner out? And next thing you want to talk to us about is, what are you thinking of as far as pledging as collateral to secure the loan? Lenders, bankers always want to know that there is some kind of, that the borrower has some kind of skin in the game. So having that piece of information is important. You also want to paint a picture for the lender, how well the business is doing this year, and also what do you expect it to do the next year. So all these things are things that you should definitely kind of go through in your mind and have an answer for before you approach a lender. And for this product, for instance, the small business booster loan. So we kind of help you answer some of these questions off the bat in its design. So the product is specifically designed for working capital and business expansion purposes, not for consumer or debt consolidation of, let's say, personal credit cards. And we are limiting it and offering it actually to owner operators. So let's say if you have a business that owns a piece of rental property, then that's what's considered passive income, then you would not qualify for this product. But let's say if you run a salon, a deli, a restaurant, and you're looking for funds to expand your business, or working capital to pay your vendors, to buy additional supplies, then this is the right product for you. How long has this business been operating? Well, we will accept businesses that has been around for a year. So if you can provide us 1 year's worth of tax return, then you qualify, for this loan. Certainly, we'll have to go through certain underwriting parameters, but we only require a business be 1 year old in order for us to consider you, as a potential recipient of this product. The loan has a maximum amount of up to 100,000. So how we designed it was that for loan amounts up to 25,000, the repayment and amortization period is 3 years. Anything above 25,000 to 100,000, the repayment and amortization is 5 years. And the reason we did that is because we kind of took a look at the debt service requirements and the ability to and the general business cash flow of small businesses. At the 100,000 level, based on those timeframes, you're probably looking at an annual sales of about 350, 400,000, which for a lot of our small business borrowers, that's kind of like their sweet spot, especially if they're a sole proprietor or a closely held LLC. Where they have very few members and it's a family business, or just you and a buddy had an idea and started a business, and typically that's about the range that the sales would fall in, and that's exactly who we have come up with this product for. And the question of what assets will you be using as collateral? Well, the product is designed to say your business assets. Notice I didn't say how much or what is the minimum requirement. Really, we just want to be able to place a blanket lien against your business assets, regardless of how much it is, as long as your debt service qualifies for the amount. Your business may have assets less than that, but that's okay. Again, the reason for that is we just want to have the owners and borrowers feel like they're skin in the game, so that they can be a partner, with the bank during the 3 or 5 years that, we have this partnership together. And obviously one thing we cannot do, and you have to tell us, is how your business is doing this year and next year. We're all cognizant of the impact of COVID has had on businesses, some more so than others, and some have recovered faster than others as well. But it's important to kind of let us know, where you see your market. Do you see more foot traffic coming in? Is your takeout business really, if it's really taken off during the pandemic? Have you adapted? How have you adapted? It's okay if your sales has dipped, but what are you doing that is different? What are you seeing that's improving? So all those things are pieces of information that would be extremely helpful to us, when we look at your loan in our flexible underwriting way. So all pieces of information to keep in mind and provide. So again, when a couple of things that bankers look at, and you should also think about, because when you take out a loan, you want to step in the shoes of the lender that you're talking to, right? So it's important for you to know what they're looking for. So really, they're looking for the capacity, which is how much cash your business can generate. They're looking at character, which is, what's your reputation? Maybe they know somebody that knows you within the community. And also, what does your credit history say about you? As far as how many credit cards do you have out there? How often do you repay your bills? And how do you handle all of that? Do you do it in a consistent and responsible manner? capital. So this one I think is good. I think, and we look at it not in the traditional sense of how much money are you putting up, but more how committed are you to your business? What are your values? Have you been with the business for a long time? Is it something that you plan to do for continue to do for a much longer period? So all of that tells us something about the borrower and their willingness and commitment to make sure that the loan is repaid in full. And we take that into consideration when we look at the entire borrower holistically, and therefore not rely as much on some of the other financial metrics. And that's really our approach to community lending and what we've been doing for the last 22 years. Conditions, again, this just goes to, this is how well you know your business and your prospects. When I say prospects, I really mean your market, your product, your customers, and how well things are going, how well you think things will go and continue to be for you in the next several years during the course of this loan and during the course of your ownership of your business. And again, the collateral we talked about earlier, it's just what kind of assets are available to lenders if a loan defaults. And again, for our product, it's just a blanket lien on business assets. And I will share with you in a little bit that if you are able, if for some reason, to provide a junior lien on a piece of real estate, there's a benefit to that, and that's built into the program. And I won't spend much time on this, but just as far as telling your story, so you want to obviously on the cash flow piece, kind of back that up with tax returns, pay stubs, bank statements. Certainly, a credit report will be pulled. And if it's a business, then similar type information should be expected to provide that to the lender as well. Okay. And couple of coummon business structures that we usually see. Although I apologize, nonprofits don't qualify for this product, but we do see nonprofit quite a bit as we do lending to nonprofit organizations. So for proprietorship, if you're coming to us, we just need you to be able to document your ownership, your tax returns, and your Schedule C. If it's an LLC, returns, articles, operating agreement. And the reason the operating agreement is important because it specifically tells the banker, tells us, who's responsible, who gets to make the decisions, and who owns what percentage. So that's why that piece of information is important to us. If you happen to be a corporation or S corp, then again the articles of organization and the bylaws as well would be useful for us. So this is just really for your reference, the borrower's reference. If you're happen to be one of the the three, excluding the nonprofit entities, things to think about, what you should have, readily available when you are approaching a banker, and to discuss a loan. If you don't have it, maybe you should make an appointment and talk to your CPA or attorney to help you draft one or and file some of these documents, because it will be required in, I guess, really just all aspects of finance if you're dealing with a bank. So that's just good practice. Okay, so now the more details about the small business booster loan. So as I mentioned earlier, it's up to 100,000, and again, up to 25, it's 3 years, and up to 25 or more, it's a 5-year maturity. So going to that junior lien that I talked about. So if you can pledge a piece of real estate as collateral for the loan, we will actually buy down or reduce the margin on your loan if you're able to do that. The reason that we can do that is because we look at the product and the different pieces of information that we get and plug it into our underwriting, and we come up with a risk matrix. So if you're able to pledge a junior lien on a piece of property that you own, then we can reduce your margin on your loan, and therefore save you some interest over the course of the year. We will require all owners of the business to be guarantors on this loan. And again, This is part of that commitment that we talked about. And what that means is you will be asked if if your business is a separate entity or has a different tax ID than you, the owner, then you will be asked to sign a guarantee. And it's a piece of paper which basically says that if the loan were to go into default, then that you would be personally responsible up to the amount of the loan, should that happen. And that's pretty standard. Um, we will want to see your business tax returns and also personal tax returns before and on an ongoing basis, during the life of the loan. So for each year that you are with us, then we would ask that you provide those returns to us upon their filing. Um, for for businesses, as I mentioned, you only have to give us, you only have to be 1 year old and then you qualify. But we do ask that you do your best to give us your last 3 years returns if you have it. So this way we can look at the trends and be able to understand, the operating history of the business that you own and something about you as the borrower or guarantor. So the fees for this product is 1% origination and a $500 documentation fee. There is no title, there is no appraisal required. Even if you pledge a junior lien, none of that is required. So that is not an expense that you will have to pay. The rate can be fixed for 3 or 5 years, depending on the loan amount. So for a $25,000 loan, it's fixed for 3 years. For a 25 and above $1,000 loan, then the rate is fixed for 5 years. So the base rate on this product is 5.5% plus a margin, and the margin could be 0 or up to 3.25% based on the underwriting criteria. And again, some of the things that I talked about, the whether or not you pledge a junior lien on real estate, that can reduce the margin, and your credit score. The minimum that we look for on this product is 680, but there's a range. So the better the credit score, the lower the margin. And also the debt service, the higher, meaning the more able you're to service the debt that you're looking to us to get, the lower the margin you will receive. For debt service, the way we look at this, we actually will look at it on a holistic level, meaning we will look at all sources of your personal income, including the business, plus all of your personal debt, including the one that you're requesting. We found that this way allows the borrowers more flexibility as far as and getting more dollars that they want and need for their business to grow. And we find it's really just a truer reflection of the strength of the community member that we're dealing with. So it's an approach that we've taken for at least the last 20 years or so. It's worked out well for the borrowers that we've worked with, and and we expect to see the same here. Um, and we expect to turn things around between 3 to 7 business days upon receipt of a complete package. We have a loan committee that meets at least once every week. I chair the loan committee, and all of our guys are here in the loan office. So it's very easy for us to get together and talk about a loan and approve it. So we want this to be a quick turnaround so that the borrower can get the funding as quickly as they need it. And settlement will be easy. So we'll just generate the documents. It'll be pretty standard documents, and we can meet somewhere, and or you can come into our office to have those documents executed. We do ask that the loan proceeds be dispersed into an Asian bank account, and that the loan payments are paid via a direct debit from that account at Asian Bank, and that account should be your operating account as well. Let me see, and I did talk about the blanket UCC lien against the business assets, and if you own the business, obviously we will expect that you would have some kind of business liability insurance. And again, if it's not something that you have, you should look into it and talk to your insurance agent. It protects you from loss and liability and all hosts of things that could happen in running a business. So it's definitely well worth it to have, and certainly is a requirement for this product. With that, we're just about 11:50, so maybe I'll take a pause here and to see if there are questions, either from the Kieran or Yael, and maybe I can answer.
You can. Well, first of all,
Sure.
James,
Mhm.
first of all, I want to let everybody know the enormous respect we at the Hispanic Chamber have for Asian Bank. Folks, the Asian Bank was one of our primary partners during the PPP during the pandemic. Every single person that dealt with Asian Bank had nothing but rave professional reviews for you, James, as you know. And we would just encourage the community to really take a look at the opportunity here with this small business booster loan. I took some notes, James, while you were talking, and when you talk about the fact that you don't need collateral, okay, real estate collateral, okay, you talk about the fact that you're in business for a year, as long as you've got your tax returns, you've got your paperwork buttoned up, you are potentially good to go. You can get up to $100,000, and you can, if you get the $25,000, if that's all you need, it's 3 years to pay that back. If it's 5 years, if it's up to the $100,000 mark. I mean, that is those types of terms for a small business are really fabulous. And one of the great things that people really need to understand is that the quote unquote requirement that you're putting forth to have the money in an Asian bank account is actually extraordinarily positive for the business owner, because this was something that we encouraged as well during the PPP, that when that money came from the bank, that you set that whole, you put that money in an account, because now you can account for every penny. And you're not mixing, apples and oranges and things like that. So this is a very strong product. James, if somebody was, let me just ask, if somebody
Mhm.
was in business for a couple of years, really had it not shut down and had to shut down versus kind of scale back during the pandemic. And, the doors have been open again for another last 60, 90 days, whatever. Do you take into consideration the sort of hiccup that may have happened, or does it have to be a continuous business for at least a year?
We can look at the historical information, because certainly the pandemic has impacted all of us, and it's definitely is an extraordinary event we were talking about earlier. We hope that something that will never happen again in our lifetime, at least. So we are certainly cognizant of that and are sensitive to that. So somebody that's had a business because of the pandemic, and there could be a lot of reasons why a business would feel the need to cease operations during that time, right? They may be ill, employees may not want to show up for work, family members may be ill and they have to take care. I mean, there could be a whole host of reasons. But as long as we understand the story and are able to get an understanding of what the business is like before the pandemic, and
Right.
also have a understanding through a conversation about what they expect the future outlook to be, and what are some of the signs that are indicative of that future. We would be comfortable in looking at that client for this loan, certainly.
Perfect. So, James, if I'm a small business owner and I'm listening, or once this is up on our website, which will be in the early part of the latter part of this week or the early part of next week, and I want to get in touch with you, how do I do that?
Oh, sure. Well, there's a couple of ways. So one, you could call us on our main number, 215-592-1188, or send an email directly to lending@theasianbank.com. So that actually goes to our loan group, and somebody will get back to you very quickly. Or you could always go to our website at www.theasianbank.com, and then there's a send us a message function as well, and some additional information on this product and also our bank if you were interested.
Okay, so folks, this is the Small Business Booster Loan from Asian Bank. James, as you know, we're going to highlight this in our upcoming July newsletter,
Mhm.
which will also go out to our membership. And folks, if there's anything that you need, we are happy to refer you to James and the Asian Bank. This loan is amazing. We have not at the Chamber, and I've been at the Chamber almost 5 years, seen anything like this. Where the sort of the parameters are so favorable to small business. So I encourage you to take advantage of it, make a phone call, send an email, get in touch with James and have the conversation. Because if you don't ask, you don't get, you don't push, you don't move forward. So with that, James, you have the last word, and then we'll say goodbye. So you take it away.
Great.
Anything
Well,
else?
thanks again. Again, thank you again for the opportunity, and feel free to reach out to us with questions about this or anything, that that you have questions about as far as banking and any products, even as a sounding board. If you're just looking and preparing to do some other thing, and so we're happy to discuss and share our experiences and knowledge in the field. And just lastly, and everyone enjoy the rest of your summer and stay healthy and happy, and hope to see you soon.
Yes, we thank you. James Wang from Asian Bank, folks, 215-592-1188. I can tell you James returns phone calls very quickly. So we thank you again, James, for your time and consideration. And go Asian Bank. Thank you, people.
Great.
Take care.
Thanks. Take care, everyone. Bye-bye.
Bye-bye.